Plunging Wall Street stocks and record bar learn. New York. Reuters. Wall Street tanked on Thursday, slamming the book on the longest ever U.S. bull market after new travel restrictions to curb the coronavirus spread spooked investors and rattled world markets. President Donald Trump's Europe travel ban, announced late Wednesday, sent all three major U.S. stock indexes into a tailspin, with the S&P 500 and the Nasdaq confirming their first bear market since the financial crisis. The blue chip Dow suffered its worst one-day loss since October 1989's Black Monday. The benchmark S&P 500 and the Nasdaq have lost over a quarter of their value since reaching record closing highs just 16 sessions ago, as nations around the world grapple with how to contain the fast-moving coronavirus and its economic effect. A bear market is confined when an index sinks 20% or more below its more recent closing high. The continued negative action in the market is telling us whatever's been done so far hasn't been enough, said Joseph Soroka, Chief Investment Officer at Noble Point in Atlanta. People can't point to a tangible outcome that's going to restore normal daily life, so uncertainty remains. Prominent organizations, educational institutions, and every sports leagues are foregoing events out of caution, Sloker added. Leading institutions around the world are setting the tone. We are cautious because they are telling us to be cautious. Trump's sweeping traveling restrictions, limiting flights from continental Europe to the United States, sent European shares to a near 4-year low and slammed airline stocks already but already battery but battered already battered by the spread of COVID-19. On Wall Street, airlines SPCOMARIR Spookomeyer plummeted 19.6%. Boeing Company (BAN) fell another 18.1%. JP Morgan abandoned its long-term backing for the company's shares, setting the plane maker on course for its worst week ever. The U.S. Federal Reserve is expected to cut interest rates for the second time this month at the conclusion of its two-day monetary policy scheduled for next week. U.S. Treasury yields tumbled as anticipation grew for aggressive easing on the part of the Fed. The New York Federal Reserve announced on Thursday that it would introduce $1.5 trillion in new repo operations this week. Any government action that has dollars tied to it that actionable for the banking system would be viewed as a positive, Soroka said. But what the market is looking for is tangible evidence, that the government is trying to starve off a recession. Interest rate sensitive bank shares SPXBK dropped 10.5%, while corporate credit worries hit bond fund prices as companies began to draw on credit lines. The CBOE Volatility Index, a gauge of investor anxiety shot up to levels not seen since November 28, the height of the financial crisis. The Trump travel ban also hit oil prices, sending frontman's Brent crude down 8.6%. Oil prices were already under pressure after Saudi Arabia and Russia vowed to boost production, flooding the market with supply despite plummeting demand. The S&P 500 Energy Index (SPNY) lost 12.3%. The Dow Jones Industrial Average (DJI) fell 2,352.6 points, or 9.99%, to 21 to 21,200.262. The S&P 500 SPX lost to 260.74 points, or 9.51%, to 2,480.64, and the Nasdaq Composite IXIC dropped 750.225 points, or 9.43%, to 7,201.80. All 11 major sectors of the S&P 500 closed sharply lower. Declining issues outnumbered advancing ones on the NYSE by a 23.77 to 1 ratio. On Nasdaq are 69 to 1 ratio favor decliners. The S&P 500 posted no new 52-week highs and 336 new lows. The Nasdaq Composite recorded 3 new highs and 1,573 new lows. Volume on U.S. exchanges was 18.54 billion shares, compared with the 12.49 billion average over the last 20 trading days.